page. That's going to be found in the events page on our TRR website itself. So without further ado, our presenters today are Brian Finley and Sharon von Schoenberg. Brian is a realtor from Edmonton, Alberta. He is a CIPS instructor and a member of the Canadian Real Estate Association's Global Committee. So he'll be joining us today and he'll be taking us through all things Canadian real estate. We're also joined by Sharon, who's the product manager for global services with the Canadian Real Estate Association, and she'll be providing us some insights with regards to their global affiliates program and how you can utilize that to grow your referral network with Canadian contacts. So, Brian and Finley, I'm going to turn it over to you guys now.
Okay, thank you very much. Welcome all. I think what we kind of wanted to do was give you a kind of a bird's eye view of Canada. So Sharon, if you want to start, we'll start with the map and just kind of take them across country, so to speak. So population number that they give you there is 35.1 million. What I've learned is that when we're trying to compare US things to Canadian things, usually if you use a 10% mark, you're probably about right. Excuse me. And so if you take a look at that map, what I'm going to do is kind of walk you across this country from the west to the east, and just touch on the largest cities and maybe just speak specifically to some of them that you may have heard things about over the past 6 months to a year in terms of things that are going on in here. So if we start on the west coast there, then you're going to see Vancouver, BC. We're going to talk about that again a little bit later, just in terms of it is an area that was so hot in terms of our markets that, in fact, the government stepped in, both the local government in terms of the British Columbia government and the actual federal government who stepped in because they were very worried about it being too overheated as a marketplace. And so for a country that, generally speaking, does not have a lot of real estate tax or a lot of prohibitions on real estate, Vancouver has now become kind of the exception to the rule because they are trying to push that market down a little bit. And in fact, based on the numbers that we saw in the last month or two, they've been pretty successful of making that market drop down. So that's British Columbia. There are 10 provinces and 3 territories in Canada. The territories are those items way up north where few people tread. We already have snow here. So British Columbia is the Vancouver. In Alberta, I'm in Edmonton. So you can see that one right there. Edmonton, a really very affordable market from a Canadian standpoint. I mean, our average single family home, nice single family home, you're looking at the 375 mark. Edmonton is a kind of a blue collar town. And then Calgary, which is about 3 hours to the south of us in Edmonton, is basically the white collar town. So a lot of headquarters, business headquarters. Obviously Alberta, oil and gas is what it boils down to. That's kind of been our mainstay, although we're learning to expand and operate slightly differently. Then you get into the Plain States and Saskatchewan, Saskatoon. That's basically the large center over in Saskatchewan. Manitoba has Winnipeg, home of Winnie the Pooh. And basically that's where most of their operations are. They have some interesting real estate rules and requirements around agents there, which we don't have in the rest of the country. Then we get into Ontario, which is kind of the east side of Canada. And that's where obviously our large manufacturing centers and commercial centers are. The biggest of those obviously being in the Toronto area. Some of the other items that you see, the other areas there, the Waterloo, the Londons, are around the Toronto area. Then Ottawa, which is the capital, and Montreal, which puts us into Quebec and Quebec City. That's our French province for all intents and purposes. So if you were going to do any business there, you better be able to speak French. And then Halifax puts us over onto the East Coast, over to a place where, again, there's a lot of advantages in terms of dollars and cents and the price on properties. So that gives you kind of a west to east look at the country. And one of the things that I'll say, because I wanted more than anything to kind of give you a flavor for what does this mean to somebody in Texas or Florida or whatever, is to understand that since we are such a large country, really what it boils down to is it's the old follow the plains kind of scenario that would suggest that people in Alberta are likely to go down to California. They're likely to go down to Palm Springs if they were looking for additional properties down there. And there's a lot of flights, for instance, from the Edmonton, Calgary area into the Texas area because of the oil and gas scenarios. Whereas if we go on the eastern side, the people over in the Toronto area tend to go down into the Floridas or into the Carolinas if they're looking for additional property. So very much of a west-east scenario. And part of that is just because for me to get to Florida, basically I have to lose a whole day simply because of the plane scenario. So if we're talking about political, we are pretty much very, very, well, we'd like to say stable. And this is our 151st year now. We're on that. We had our big celebrations last year. So that kind of takes you through the cities. Let's take a quick look here at some of the country overviews off the charts. And one of the things that Sharon will talk about afterwards is that we have actually a really nice book or pamphlet that you can get, which when you become a Korea Global member, and that has a lot of the information that you're looking at today, as well as allowing you to take advantage of some of the webinars that have already been done up here over the last year and a half. We do consider ourselves to be a pretty good place to invest and work. We tend to be very multicultural. So you're going to find that in any of the major centers that we talked about, the cities, you're going to find that very much a lot of people, a lot of cultures coming together. Basically, our workforce is highly educated, which is good. And so we consider ourselves to be in a pretty good position. And as you can see there, it's always good when they put the little laurel around first. And that's basically they're looking at the G7s and talking about democracy, economic freedom, social progress, and overall reputation, because everybody knows we're Canadian, so we're pretty nice, right? So if we go over to the next country overview, Sharon, then we'll look at tax competition among 10 countries. And what you're going to find is that, yes, our taxes are distinctly lower. So both from a standpoint of commercial as well as residential, there are some tax advantages. I always tell people if you're going to be cross-border, regardless of whether you're coming up here or you're going down to the States, as the case may be, one of the most important things you have to do is have yourself a good tax reference source, a BDO, somebody like that, who basically can look at the tax ramifications. But the bottom line is, from a Canadian standpoint, we actually have less taxes in a number of areas. And as I said, the biggest difference or change that we've seen just in the last year has been over in the BC Vancouver area, where real estate taxes have actually increased significantly, just to kind of slow that market down. The top 5 in the world, the Toronto, Vancouver, and Montreal are the 3 biggies that they show over there. I know Toronto's claim to fame a little bit with the Amazon being the Canadian city that was kind of looked at as a possibility for them. Let me see if there's just anything else there. I don't think so. I think that kind of takes care of that slide. Let's just talk about what I would call organized real estate in Canada. And what you're going to find is that organized real estate up in Canada is not that much different than the organized real estate you're used to down in the United States. So we look again about 125,000 real estate brokers, agents, and salespeople. And we have boards and associations, and I'll talk a little bit more about that breakdown. But I think what you're going to find is it's very, very similar to you. The Canadian Real Estate Association, that's Sharon and all the good people over there in Ottawa, basically they basically assist us through the whole process. We'll talk in a minute about Realtor.ca, which is a beautiful vehicle for us as members to be able to use. But they're obviously where the member professionalism and ethics is, and their offices are in Ottawa, and Ottawa is the federal capital where all the political items take place. So they're right there on the home ground. They also provide us with a lot of updated information, and through the global committee that I serve on now, we're actually starting to look really hard at global numbers to try and understand both the outbound and the inbound. If we look at the next slide, then what you're going to see is you're going to basically see a breakdown, and it's not going to be a lot different other than we don't have states, we have basically provinces. And just like you have different states and all of the different states have their own rules and regulations, it's the same thing up here. So from a federal standpoint, we have CREA that represents the industry, is involved in large-scale technology as well as legislation. Then we have the actual associations on a provincial level, and they basically are handling the membership involved in their own areas. For instance, I'll just use Alberta as an example. In Alberta, there are actually, I believe, 11 associations here. Might be 10 because I think one just in the last 2 years amalgamated with another one. But generally speaking, we'll have a number of associations built around those major centers that we talked about. And they'll connect. So in order to be basically attached to the provincial association, you also are going to then be attached to CREA on the large level. We have also I guess you could say, an overseer on each province. So in Alberta, it's area, the Alberta Real Estate Association, and you're going to find that the provinces all have that large overreaching association as well, usually very involved in the political end of business. But in addition to that, they are quite often doing membership outreach and education. So we kind of have the same setup that I think you're familiar with down in the States, which basically says we have the large association, CREA versus ANAR, and then we have the provincial associations, which would be the areas, and the Ontario Real Estate Association, which handle the provincial, and then we have the local boards for the different centers. So I think you'll find that that's very, very similar to what you have down in the States. Okay, Sharon, let's take a look. Really, the one thing that we have that's quite different than what you have in the United States is that we have basically one MLS system that covers the entire country. And that, I think, among other things, is part of CREA's claim to fame. And that's Realtor.ca, and we'll see some more of that briefly in a few minutes. Let me see. I think that pretty much covers that. That's the big thing, is the MLS. So let's talk about owning property in Canada. So we're going to talk a little bit about inbound. One of the nice things is, obviously, we have everything. So we've got ocean, we've got prairie, we've got plain, whatever you're looking for. We got farming, whatever you're looking for. We're very, very diverse from that standpoint. And the other thing is we have actually very few limitations on who can purchase. Actually, across the country, the only place that has what I would consider to be a serious limitation for those individuals coming from another country would be Prince Edward Island, because in Prince Edward Island, there's actually some requirements that say if you are basically a non-resident, you can't own more than 5 acres, and you can't own more than 50 meters on the water. But other than that, things are pretty much wide open in terms of looking at property. And in most places, the exception at the moment being the Vancouver area, you're going to find there's very little in terms of restrictions or additional taxes that you might have to pay. So generally speaking, we're a lot of different cultures, a lot of different opportunity up here. So it's, generally easy for non-residents to buy property. There's very few restrictions. Where and what are non-residents buying? Well, British Columbia, obviously, Vancouver area. And I will speak specifically to that just in case you have individuals that are looking in that area, to understand that you really need to work with a realtor who's on the ground in British Columbia if you're looking in Vancouver. And the reason for that is because, believe it or not, these are actually broken out, segmented into areas. So what it boils down to is you can't just say that all of Vancouver has restrictions, because that's not necessarily the case. So it really is mapped out. You need to work with a realtor on the ground who knows those changes. And they have changed, basically, I wouldn't say on a month-to-month basis, but radically for us over the last year and a half. The other places, obviously, Ontario, Eastern Canada, they're popular destinations. We have all kinds of types of property, whether you're looking for vacation, second home, investment, and our commercial market has been very, very strong over the last couple of years. So it's been really nice. And the beauty is, one MLS system covers the whole country, so you can see it all in one place. Let's go on to the next one. Sharon, real estate transactions, what's different? So I guess you could say I had the advantage. I came to Canada in 2000. So I came up from Massachusetts. So I've been here about 18, 19 years. Market's been very good to me since I've been up here. And basically, when we talk about what's different, there's a couple of things that we just kind of want to go over. Talk just a little bit about the process, talk a little bit about things like title insurance, taxes, talk even in more depth about financing, and then just talk about what I would call culture or nomenclature as far as how the process works.
Hi, Brian.
Yep.
Hey, it's Amy. I'm sorry to interrupt, but a
No,
couple
you go
of
right
questions
ahead.
for you.
Sure.
Someone has asked, excuse me, as a Canadian living in Texas, can I also get a real estate license there? So this is a Canadian person.
Good question. Yes, you absolutely could. So there isn't a residency requirement around a real estate license. I know some places. My son actually practices down in Tennessee, and I know he can only practice within a certain area. Generally speaking, each province has their own regulatory body. Sometimes it's a regulatory body run by the provincial government. Sometimes it's self-regulation. In Alberta, we're self-regulated. So you're going to need a license in each one of the provinces. There is for all intents and purposes, the ability of any agent who wants to be licensed across all of the provinces, but you actually have to meet requirements in all of the various provinces to do that. Probably be a little bit expensive, but I have a number of friends who carry licenses both in BC and Alberta because there's a fair amount of back and forth. So yeah, I would suggest that would be the case. And I know when things went, for lack of a better word, south down in the United States, I went down to Arizona and got an Arizona license so that basically I could help people who were looking at going back and forth at that particular.
So do the educational requirements and those things sort of go cross the borders with one another? Or are there extra classes?
Yeah, pretty much. There's not a lot of difference between one license and another. Basically, if I wanted to get my license, for instance, in Saskatchewan, I would just go and challenge the exam. Most of the things are similar. Occasionally, you get into things like farmland and rural, those kinds of things where you would have to have a little more knowledge of one versus the other. But generally speaking, yeah, if I was in Texas, I guess I'd be looking at, if I thought there was enough cross-border for me to do, I certainly would be looking at the possibility. More importantly, I think the advantage is you learn the differences, because some of the differences I would consider to be significant. And let's go into those, Sharon. Is that good? Are we good with that?
I think so. I had one more question I wanted to ask, if that's okay.
Yeah, absolutely.
When you were talking about the governing structures, because here in the States, we've got, of course, our states are then divided into counties, and a lot of the real estate regulations are county-wide here. Is there a similar structure there in Canada?
Generally speaking, no. Generally speaking, the only reason why I say generally speaking is because I think I mentioned in Winnipeg, they actually have a restriction around agents. And we always have this conversation up here with various associations, both on a provincial level and on a local level, just in terms of the, is the real estate agent 40 hours a week? Is this their main function? Is that what they're doing? But generally speaking, you're going to find you're not going to hit a lot of regulations at this point if you wanted to actually become licensed up here.
We have a couple more questions about residents and things like that. Do you want to do those now?
No, let's do them now. Sure. Because
Okay.
this is kind of important stuff. If
All
you
right. So someone asks if Canada follows European Union laws, taxes, and regulations.
Well, we are a partner with the United States. We're a partner with Europe. But generally speaking, no, we don't follow those per se. We have our own complete financial process. And like I said, in a couple of minutes, I'll talk about the mortgage differences, because one of the things that I find when I have a client who goes down to the United States to buy property and starts to work with a U.S. realtor is that what the U.S. realtor doesn't understand is that you cannot correlate how we do mortgage financing up here with how you do mortgage financing down there. It does not correlate. So if you were to tell me you're paying 6%, and I'm going to tell you right now, I got clients paying 3.5%, it's because the way we do our mortgages is significantly different.
Let's see. Somebody asks, when you distinguish residents and non-residents, is there a permanent residency status in Canada?
There is. That's in fact what I am. I'm a permanent resident of Canada. I am not a Canadian citizen at this point in time. And because this is where you have to talk to your tax people, my tax situation would suggest to me that at this point in time, there would be no benefit to me to become a Canadian citizen. So I'm a permanent resident. I can work up here. I can travel here. I can do whatever I want. But basically, I have a U.S. passport.
All right. Someone says, are you aware of any issues or challenges with referral fees being paid in or out of Canada, given that it is international?
I'll tell you what the biggest issue is with referral fees. And we go back to being Canadians being so nice. We don't ask for them nearly as much as we should. And we've seen that number is what it boils down to. We looked at that number in the last year or so and recognized that there are a number of referrals going down to realtors in the United States, and then there's literally no follow-up by our realtors up here. So we're trying to train them to be a little bit better about that, because they're kind of leaving some money on the table. But generally speaking, you're going to find, and if you become a global member, one of the things that's in there is actually the ability to have a form that, for all intents and purposes, is available through Korea as a referral form that you can use, which pretty much standardizes that.
Cool.
But I can honestly say I've never had any trouble. All the realtors that I've worked with in the U.S. with cross-border have been really good.
Well, we certainly
payments. And then when you send me a check, it's U.S. funds. So we just get really excited up here at that point in time with the exchange rate. And right now, the exchange rate, if you were trying to think of a number, basically 1,000 U.S. is going to blow up to about 1,250 Canadian when it gets up here. So.
All right, I'm packing my bags. Someone's asking about mortgages. Are you going to cover that in a bit?
I am. I'm going to cover that one in a minute, because I think that's kind of a critical one. So we'll do that. So let's just talk through process timelines. I just want to make sure that doesn't kick in. Yeah. Okay. So let's just click another slide for me, Sharon, and let's just talk. This is what's available for you through the global, and basically talks through the process. And it really just goes through brief. And this is both the residential and obviously the commercial. I'm not really really isn't sufficient time to cover anything on the commercial end. But generally, I think you're going to see it kind of mirrors what you do down there. It's a property search, finding them the property. Some provinces have written service agreements as a specific requirement. That is to say, if you work with a buyer, you have to have them under contract. Some provinces do not. So a local realtor would know whether that was a requirement or not. In Alberta, we actually do have a written service requirement. Then basically, we usually suggest that our individuals get themselves provisionally pre-approved or pre-qualified, as the case may be, by some kind of financial institution. And we do have mortgage brokers in Canada, across the country, a number of different companies that basically provide that service, as well as obviously our banks. And then basically we're finding a property, doing an offer to purchase. The offer to purchase up here is not as lengthy as the one is down in the United States, at least any that I've run into. Generally speaking, it's a 6-page document up here. Most provinces, but not all provinces, may not require any kind of a property disclosure form. So that's not always a requirement up here. Then basically it goes pending and final sale. And the pending is just for the normal conditions that you would think of: financing condition, inspection conditions, possible sale of another property. And then there's title search and registration. We have a beautiful system in terms of our title search, which is why a title insurance up here has never really taken hold, so to speak. And the reason is because basically our title system is such that we don't have a historical. We basically destroy everything prior to, and the person takes new title at that particular point in time. And so I guess it's the advantage of having a title system that occurred after the learnings from what was developed down in the United States. And then we have basically a closing. And when we do our closing, we'll touch on that briefly here in a second. We actually normally do that in the lawyer's office, with the exception of Quebec, our French counterpart. In Quebec, they actually use a notary. So that's kind of the general part of the transaction process. The one thing that I'll tell you, if you're working with a Canadian down there in Texas, is they're going to take off their shoes when they go in the property. That's one of the biggest differences that you'll find. So let's take a look. Sharon, we'll move one more slide over. So as I said, basically we're using lawyers, except for Quebec, where they may use a notary. But we don't have a lot of escrow. And when it talks about escrow account, basically the real estate offices, that being the brokerages, are holding any trust funds until such time as the final transaction. The cost to actually close a purchase up here from a legal standpoint is probably somewhere in the neighborhood of $1,200 to $1,500, depending on obviously on the price of the property in terms of title payments and what have you. One of the other things that is interesting to note up here, and I do go down to the National Association of Realtors programs and what have you. So I know that you have this kind of looming on the horizon for you. We have FinTrack, so we are connected with, I would be afraid to say exactly what the numbers for FinTrack is, but bottom line is, we have a whole system up here, a number of forms. This is basically a government organization that requires us to identify all of our clients and to provide paperwork, including the movement of any monies. So this is actually the anti-money laundering. And this is a big deal up here for us. This is about, I guess about 3 years ago, this came in to effect. And we are, most brokerages are aware of the fact that there's audits and large fines if you don't provide the paperwork exactly the way that it should be done. So, so we have that requirement up here, which I know down there's been some discussion about you joining in on that at some point in time. So that would be a requirement if somebody was purchasing up here. And actually, it would put that person at what we call a medium risk, because it would be an individual who is not from Canada. So if we look at the next slide, Sharon, we can talk just about title insurance. As I said, we don't, generally speaking, use title insurance much here, simply because of our title system. It's pretty lock and loaded. So title insurance, generally speaking, about the biggest advantage and the biggest reason why we have it at all is that occasionally it covers things like decks that were put up without a permit. Nobody knew that that was the case. I think you'll find that in most of our provinces, our taxes are reasonable. As I said, again, we go back to Vancouver as kind of being the exception at the moment. So Yeah, you're not going to find that you're going to be penalized, generally speaking, throughout Canada for being a non-resident, unless you're purchasing in the BC area that we talked about. And even that, again, as I said, is a cutout area. There's a specific area for that.
Brian,
Yep.
briefly, before we move off of transactions, someone asked if there are property inspections and repair negotiations.
We do. We have a whole inspection process, no different than the United States. Matter of fact, Amerispec, who I know, I think they're out of Memphis. They have franchises throughout Canada, so we do the regular inspections. I think I want to be cautious because I certainly wouldn't want to paint it this way across because I'm not as familiar with all the different states. But I will tell you that generally speaking, inspections up here are done for the purpose of ensuring that there's nothing that we didn't see because we couldn't see it. So they are, generally speaking, when you do an inspection, you don't have any expectation that you're going to renegotiate as a result of that, unless it turns out that they find something significant. You can't see my roof right now because there's snow on it. So the bottom line is if in fact the inspector got up there and looked at the roof and said, well, the roof's got to be replaced in the next year, then obviously you might look at renegotiation. But generally speaking, renegotiation as a result of inspection is rare up here. And we kind of teach our clients that what we're doing is just trying to make sure there aren't going to be any surprises. That good?
Yes, sorry, I muted myself.
Yeah, don't scare me. I didn't want
Thank you.
Nobody's there anymore. That wouldn't be good. Hey, Sharon, let's do the next slide because this is the financing one. So we finance things quite differently up here. I assume down in Texas you probably have PMI or some version of it. Up here, we don't have PMI per se. We actually have an insurance, which is provided through a crown corporation. Generally speaking, it's usually CMHC. There are other companies, but CMHC is the one that's normally due. That's Canada Mortgage and Housing Corporation. And basically, they are the ones that are protecting our banking institutions. And so what they do is they charge a one-time fee at the beginning of the process. That usually runs between 3 and 4% of the mortgage that you're pulling. And that money is then basically put into an insurance fund should we have any problems in the future. You're going to find we're very, very conservative, to the point where in the last year, we have seen interest rates slowly start to move up. And as a result of that, the government has immediately stepped in and put in what we call a stress test up here, which means individuals now have to qualify at a higher interest rate than they will actually be paying. And the reason the government has done that is so that should interest rates continue to go up, individuals have already been pre-qualified based on a higher interest rate. Of course, the issue for that is that has had an impact on our first-time home buyers market, on the lower end of the marketplace. And so we'll see how long they keep that in place. But I think so long as interest rates continue to go up, they are going to keep a careful eye on how we do financing up here. So that's what you're going to see. Generally speaking, most people will put 5% down. That's basically a requirement across Canada, a 5% down on a residential purchase. If you were going to be doing something in commercial, or if you were going to be doing something in terms of second property, and you were going to use financing up here, you would probably be looking at 20% down. And once you put 20% down, then some of the CMHC requirements fall away. So it gives you a quick bird's eye view. Generally speaking, and we'll talk about outbound in a minute, but just because we're talking about financing at this point in time, With the outbound, what you're going to find is that most people who are coming down to the States are actually financing using a line of credit up here. So they're basically taking equity out of properties or stocks or whatever they have up here, using that through some kind of a line of credit, and then purchasing basically the property for cash down there. But over the last 5 years, pretty much all of the major banks in Canada have corresponding banks in the United States that they work with. So it's pretty comfortable now to do cross-border financing between the United States and Canada.
So an American buying a Canadian property could get financing through an American bank at Canadian terms?
Yes, you basically, that would be correct. They would go in, they're going to, depends on, every bank's going to have their own little nuances. But I mean, the best example I can give you is TD Bank. I know there's TD banks all over the place down in the United States. I don't know if you have them in Texas, but you're going to find them in a large number of other states. And what TD stands for is Toronto Dominion. So I know a lot of people don't realize that that's a Toronto bank, but it is. So generally speaking, yes, there are ways to do financing, both going and coming, where you can go into the banks and work through them. And while we don't share, so to speak, a credit system, so Equifax, TransUnion don't actually share the data across the border. The bottom line is the financial institutions are able to pull the data from both sides. So, so that's how they get around that at the moment.
Someone does ask if you do top loans and bottom loans in the mortgages.
That's an interesting question because I'm not sure what that term means. So, I mean, the easy answer then is obviously no, but that might not be the question. It might just be the wording that they're using.
Laura, you might want to do a little follow-up in the question box, but for now, go ahead, Brian.
Okay, very good. So just recognize the financing is quite different. So when individuals are coming down outbound, when they're coming down your way, be cautious, because if you talk to them about financing, the way it's structured up here is quite different. You literally cannot get a 30-year mortgage in Canada. That's not how they do mortgages up here. They do mortgages by terms of 3 years or 5 years is the case.
Oh, wow.
So it's quite different is what it boils down to. So that kind of takes care of the financing. What's next, Sharon? Yeah, how to work with us nice Canadian realtors. Basically, there's Sharon will talk to the Korea Global here in a couple of minutes, and that'll kind of take us through that. And that has a referral agreement. And as I said, I've had nothing but good experience on any referrals, both those going away and those coming back to us. We function very much the same. And the biggest thing with the referral agreement that we talk to, and we talk about it for the global group as well, is as realtors, we just need to communicate with each other. If I send clients down there, I want to communicate with the realtor on the other side. And I'm sure if you were to send clients up here, you would want me to communicate with you about how that process is going. So, but I think you'll find, we operate much the same. And it's always good to have that local person on the ground who knows what's going on. And Sharon, what else we got here? So that's basically the guide for international real estate professionals that you can get through the Korea Global. So I mentioned that, and Sharon will go over that in a minute. Let's talk just briefly about global clients. Realtor.ca, as I said, we have one MLS system up here. Currently, I don't know if I'm the bearer of good news or bad news. I can't tell you, but the bottom line is we will have Zillow over the next 6 months to a year. But right now we don't have Zillow up here. So Realtor.ca is kind of the go-to place for everything related to Canadian real estate. And I'll let Sharon talk to some of the back end of that as well. And you can see the numbers there. I mean, you can find anything you want on Realtor.ca. And yeah, it's great for realtors. We're obviously identified with the properties if we list. From a national overview, we'll do that. Next slide, Sharon. Excuse me.
There we go.
There we go. Just to give you an idea of the top 5 countries investing in Canada, China leads the pack at 36%. Most of that we are seeing in the Toronto or Vancouver area. India, 8%. United States, there you go, 25%. So, I mean, that's not a small number by any means. United Kingdom, 10%. We find a lot of German United Kingdom on the east side of Canada. Hong Kong, 8%. So it gives you just a quick idea of those countries. But you can see that there is money coming up to Canada. We obviously have the NAFTA agreement now, so that's pretty cool. We managed to pull that one off somehow or another. So those things are good, and certainly from a real estate standpoint, if you see a company moving in, then you want to see where they came from, and sometimes you can do a fair amount of business by getting into that company and helping their employees as they move from one location to another. This is just the chart, gives you a quick idea of the global interest in Canada. And then what you've got down there at the bottom is in Alberta, BC, the various provinces, gives you some idea that basically our international marketplace is continuing to grow. We'll do the next one. That'll just give you the housing stats. I'm not going to go through them, but it certainly is a good place to take a look at what we're seeing for housing and what we expect to see up through 2019. So I haven't really delved into that particular this one yet, but will be interesting to watch and see how our numbers go in the future. So the national average price, let's do some of that. It's projected to, we're basically 494.9. That's our basically our average price across the nation. So $494,900 this year. We're actually down 2.8% from 2017. And the reason for that is the downward pressure that the government has put on BC and Ontario, just in terms of some of the additional requirements and taxes. But we expect that to go up to about, I think, 508,000 plus. So yeah, but again, it's various. You can see the major changes from one province to another. So it's not one size fits all. It's all quite individual depending on where you're looking to go. Sharon, what's the next slide look like? That's the trends. Boy, that's a tough one to see. Basically, what we're trying to let you know is that we do have the Realtor.ca, and it is a huge database of information that you can use and utilize, especially if you're a member of Global. So I think we have 2 more slides, and then I'll get out of your way, Sharon, so that you can go. Yeah, 9% of all Realtor.ca traffic is international. So they've done a really nice job with Realtor.ca of basically speaking to the global community, and I think Sharon will cover some of that when she talks about the global initiatives. So there's your international visits versus international leads. The difference being international visits just means they kind of clicked over, but international leads means they actually did some kind of follow through on that. And what I would tell you is that since that's basically back end stuff on the Realtor.ca, probably the actual amount of international leads that you see there is a very low number, because people reach out to us quite often after the fact. They go to Realtor.ca, they look at for information. They may find a real estate agent, and they may not contact them for a period of time, and so those kind of get lost. We're working really hard from a global committee standpoint right now to figure out a way to do much better tracking. NAR is very good at that. We're trying to learn from them so that we can really understand our international market and exactly what those numbers are looking like. Then basically, this is a really nice chart, which just takes a look at the top 10 cities searched by international buyers. The biggest one that might confuse you there is Mississauga. That's actually back into the Toronto area again. Is what it boils down to. So, it gives you a good idea of which countries are looking where. And United States, you can see. Go back one more. I've got it still sharing, but if you go back one more, and as you see from the United States, you're looking at Toronto. Calgary. So again, as I said, the white collar town in Alberta, where basically there are a lot of headquarters, Mississauga, Vancouver, and Ottawa. Okay, Sharon.
Perfect.
Before we move on to the next part, can I ask you guys a couple more questions about specifics in transactions and things?
It's okay with me if it's okay with you, Sharon.
Yeah.
Okay.
Okay. So I wanted to actually go back and ask you about those mortgage terms. You said you can't get a 30-year mortgage in Canada. You can only get a 3 or 5-year mortgage in Canada. Do you just have to re-up your mortgage every 3 years?
Yeah, generally speaking, that's the correct statement. So basically, while we amortize or basically look at what the price per month will be over actually we don't use 30 anymore. We generally speaking use 20 or 25 years. And again, that's the government wanting to make sure that people aren't overextending themselves. Basically, you amortize it over a 20 or 25-year period, but then you would set your term as being, and your term can be very small. It can be 6 months if you want it to be because you're just flipping a property, or it could be up to about 5 years is about as high as you want to go. The problem is if you go longer than that. So if you were to go with a 10-year term, the interest rate that you are charged for that is significantly higher than the 5-year rate, just as the 5-year rate is higher than the 3-year rate. So most people, especially just getting into the marketplace, are probably going to take what is considered a 3-year term. Right now, if they paid their mortgage for 3 years and then they just wanted to continue with the same institution, they would not have to requalify. However, if they wanted to move it, which they have the right to do at the end of 3 years, then in fact, they might be required to requalify. But there is not currently a law on the books that says that they have to requalify if they stay with the same institution.
So is that in effect, everybody has a guaranteed, if you choose a 3-year term, you basically have a guaranteed option to refi every 3 years?
You do, so long as you make all your payments. Your issue would be if you didn't make your payments, then if you make your bank skittish, then they may say to you, because they do have the right to say it, that you need to come in and requalify.
Okay.
So it is obviously something you want to be aware of.
Right. Someone asked if there is a wholesale market in Canada as there is in Texas. Is a contract assignable?
That would be provincial as to whether contracts would be assignable. Normally, I would tell you contracts are assignable. There are some limitations. For instance, I believe in BC, there's some limitations now around assignable contracts because what they're concerned with is people assigning to somebody who's a non-resident, that kind of scenario. Generally speaking, we do have a small foreclosure market. It's not very large, and as I said, part of the reason for that is because our financial federal government is very protective of the real estate market, and they would prefer to have a slower market than to have an overheated market, and they work very hard to make that happen.
Someone asks if it costs money to refinance after your initial term, back to the mortgage terms.
Good question. You don't have to repay that CMHC, so that insurance piece that you put in place is a one-timer. So when you go to basically refinance, you would not be required to do that CMHC payment again. That's just a one-time charge. Generally speaking, you're not going to have to pay any additional unless obviously you leave one institution to go to another institution. But to be quite honest with you, in most cases, if you're going from an RBC bank to a TD bank, because you were able to get a lower rate. They also are going to do things like pay for any costs that you might have to transfer over, because they're happy at that point in time to have been able to capture you away from another bank. Our banks compete pretty heavily with each other, is what it boils down to.
So do those mortgage terms apply typically in commercial transactions as well?
Generally speaking, the commercial market is quite different. And so the deals that are made in the commercial entity are not going to be structured the same way from a financial standpoint. And the biggest reason for that is because if we're dealing in the commercial market, generally speaking, there are large dollars brought forward. And the reason that we have the terms and the items that we have in the CMHC are basically to protect the residential market. And they basically are in play to make sure that people can put 5% down, and be able to get into the marketplace. Commercial, the minute you put 20% down, then basically most of the rules and requirements that the feds would put on the financing basically don't apply.
They figure you have enough money to take care of yourself.
Well, they figure you're not going to walk away in your commercial at that
Right.
point in time anyway. So if you can't make it, that's too bad as far as the government is concerned. So.
All right. Laura has chimed back in to talk about the bottom and top loans. She says bottom loan is what we see in USA as a home mortgage. Top loan is associated with the property. You would get a top loan if you could not afford the 5% down. Does Canada have the same thing?
No. You have to have 5% down if we're talking residential property. There's no exception. We had a period of about 9 months where the government actually allowed us to do a 0% down, and they took that away way back when. So they basically require that 5% down. The only exception to that from a financing standpoint is they will allow somebody whose GDS and TDS, whose ratios are good enough, to borrow money for that additional 5%, so long as it doesn't impact their GDS, their ratios. But it's rare that somebody does that, is what it boils down to. You would be paying a very, very high interest rate on that 5% that you borrowed at that point.
All right, great. Someone is saying that she lived in the Calgary, Edmonton area in the early 80s when the oil interesting crashed, housing tank. She says she understands the housing market in Alberta is more in a recession right now. Is that correct?
Yes, I guess you could say. We would probably not use the term recession, because I really don't think any of us feel like we're in a recession. By the same token, we certainly are not in the growth spurt that you see over in the Vancouver, the Toronto markets. And to be honest with you, in the Toronto market, as much as the government has tried to push that market down, that market is just still moving right along. Vancouver, not so much, simply because there were some additional taxes that were put into play to slow that market down. So I wouldn't say that we are in what you might call a recession. I would just say we are certainly in a buyer's market in the province of Alberta, as well as probably Saskatchewan. And the biggest reason for that at this particular point in time is because we haven't been able to get our act together as far as oil and gas goes. So we haven't been able to put in the pipelines that we needed to put in. And as a result of that, I mean, generally speaking, if we were looking at 5 years ago, basically we had people who were flying into this province from other provinces to basically work here. But that has slowed down significantly. Generally speaking, I think it's probably been good for Alberta, because what it's done is it's caused them to say, we need to be a little less dependent on oil and gas, and we need to improve some of our other sectors. And so I do see that happening. And in the meantime, what it's done is it's made what I consider to be us pretty affordable here, as compared with obviously the Vancouvers and Torontos of the world. So. All
right. I do have a couple questions here, but I want to go ahead and turn this over to Sharon now to make sure that we get through.
Yeah, let's do that. Sorry about that, Sharon.
We'll come back and answer some of these.
So we just skip through, Sharon, to the traffic picture, and we'll be okay.
Okay.
Do you want me to go here or keep going?
No, you can go right over and let's get your stuff in so that they can learn more about global, which you'll get them all these answers all the time.
Perfect. Well, thanks so much, Brian. And I know all those questions are super important for our inbound, outbound, and referrals. So as you know, I'm Sharon von Schomburg with the Canadian Real Estate Association. And I'm here really just to share some of the global initiatives that we've worked with our global committee, who Brian is part of. We realize there is a lot of cross-border activity, inbound, outbound happening. And as a national organization, we're trying to figure out how we can better strategize so our members across the country are taking advantage of this country and the business coming in and out. So our global committee, I know the pictures are small, I apologize, but we are represented both by staff and practitioners. The majority of our committee are realtors like Brian Finley from across Canada. One of the exceptions you see on there is David Salvatore. He's actually the CEO of the Manitoba Association of Realtors, and they are really pushing global in their province and doing wonderful work. And we have a non-Canadian on our committee as well, Azim Jessa. He's a realtor, a CIPS designee, and was quite active at NAR, and he's part of our global committee. He's sitting for his second term and has been very helpful. So all together, our representatives are out in Vancouver, out east, central, and Quebec. Daniel Dagenet, our current chair, sits on the CREA board of directors as well as being the chair of our global committee. Some of the initiatives we started over just the last year, really, where we focused on global, is we do have landing pages in the US as well as in China, Europe, welcoming consumers who are looking at realtor.ca. So if they go to realtor.ca, they'll first be greeted by these welcome pages that talk really to some of the main purposes people are investing in Canada that we've seen. It could be to live in Canada, buy for investment purposes, and second home. So there's just some background about being active in the Canadian real estate market, and then it goes into the listing site of realtor.ca. In China, for example, it is in simplified Chinese. In Europe, obviously in France, it's in French. Right now, I know our landing pages, because of all of the Google privacy requirements, we do have a hold on them at the moment to ensure that we are following their privacy requirements before we release those pages again. But US are still active. So in May, really, of last year, and I would say even into the fall, we launched our Global Affiliates Program. Every year, the Canadian Real Estate Association does attend the National Association of Realtors Conference and Expo. And every year we had realtors like yourself coming up and saying, how can I better connect with Canadian realtors for these inbound, outbound referral opportunities? So we had a little survey at that in 2016 at the NAR show, and we launched our Global Affiliates Program, which really was allowing an international real estate professional to connect with Canadian realtors and affiliate with CREA, and we provide you with some resources and educational opportunities, as well as we hope making it easier and more time efficient to connect with realtors across Canada. So there is a subscription fee. It is $95 US a year. And what you get for that subscription fee is access to our Global Affiliates website. We just relaunched the new look and feel. You can see it there on the screen. One of the big components is our directory, a global directory. So you'd have a profile, who you are, your designations, your languages, where you specialize in your market. And you can search our global directory of our Canadian realtor members who have opted in. So of our 124,000 realtors, we have close to 500 now that have opted in that said, I am interested and active in global real estate and want to connect with people. So if clients are buying in your market from the Alberta area, you can search by province. You can go into a more advanced search and search by designation and specialty. But here's one of our members we have from Texas. And so this gives you a preview of how you look in the directory, if you will. So the first multiple listings you see here are members that are from Texas that are our global affiliates. They subscribe, and our members can look for them based on, you know, where they are, as I said, designation. And if I click on the name of Stacy, if she has provided, you can go in and edit this yourself, your picture and your profile of your business activity. So that's there for everyone. And other global affiliates can search other global affiliates. So everyone in the directory is searchable and profiled there. We have some asset pieces that international realtors can add to their websites or their signature line, saying they are affiliated with the Canadian Real Estate Association. So your local consumers, if you have people looking in Canada, know that you are affiliated and can refer them to someone in Canada to help them. And from our member side, we are educating our members to promote to Canadian consumers that they are affiliated with international realtors. So if a Canadian is looking to buy down in the US somewhere, that they can refer them and they're not just going into a market cold, if you will. As well, we put out a quarterly newsletter looking at different topics in the global industry. So cryptocurrency is a really big one. A lot of really interesting pilot projects happening with NAR and in Canada. So we highlighted crypto in our last one, and we reiterate some of our other activities going on in that newsletter. Monthly, we do just a very short email, and now I can't remember. So this has been reformatted as well, so I apologize. The new one going out actually this week, if you are a global affiliate, you'll see has a new look and feel. But each month we send out just a short email. What we're trying to do is highlight both a Canadian and a global affiliate in that newsletter. So another opportunity to raise the profile of our global affiliates and our members to help in that connection. So we do a little spotlight. How did you get started in global? Tell us something interesting about yourself. In the newsletter itself, we share one part, and then you can link more, and it goes back to our website with more that they're sharing about themselves. We also highlight any upcoming activity. We attend different functions across the U.S. and host in-person global networking receptions that you're invited to, our largest of which is coming up at NAR in Boston. All global affiliates are invited to network with Canadian delegates that attend. Typically, there's between 400 and 600 Canadian delegates at NAR, and only our global affiliates are invited to attend that Canadian networking reception. So again, as I said, that happens typically on the Friday night, and all our global affiliates will receive an invite with an RSVP. And we also host them at Canadian events coming up. Some of our other networking online, the big one is we also have a closed Facebook group. It's not a listing site, but it's an opportunity again to reach out. If you have people looking for something, or you have something you want to share about your market, it's again, the purpose is to help with that network and virtual networking to start that referral flow back and forth. Last year we had 2 affiliate receptions. I mentioned the NAR one, and we also held one at the Toronto Realtor Quest, which is one of our Canadian events worth attending as a realtor yourself. You may want to look at that one. It happens in May. And we have one coming up in the Western provinces called Banff Western Connections, and I do have a promo for it here. We'll also host a networking reception again. So there's usually some appetizers and drinks. And it's, again, an opportunity if you've virtually been connecting to meet with any Canadian realtor. Again, with the hopes of making those business connections inbound. We also promote any inbound and outbound trade missions we know of. We are working on one to Arizona. It could be something in Texas we'll look at doing in the new year, where we bring down some Canadian realtors to see what Canadians are buying in your state. So this is again just NAR. Our events at NAR, obviously we'll have our CREA booth again. We have Canadian realtors that sign up to be at the booth. So if you do attend NAR, please come by our booth. Always a Canadian realtor and their ambassador to talk to. We typically have a good variety of realtors from across the country. We have our Canadian delegate reception, and then networking in the expo. So every year NAR promotes their global networking area. Canada's time is on Saturday, November 3rd from 12:30 to 1:15. So again, if you are at NAR, a great time to come out to the expo. There will be Canadians at the table in the networking area at that time, as well as through all of the expo time really in our booth. And I alluded to Banff Western Connections. This is a great meeting to attend to connect with Western realtors. We will be running CIPS courses on the 23rd and 24th. Brian Finley, along with Carmela Ma, a CIPS instructor out of California, will be teaching the local markets, so the first compulsory, and Asia market course. So U.S. realtors can take that as well, and then stay on for the conference with the global reception on the Friday night. So I should have put the website, I do apologize, but Banff Western Connections, if you Google that, you'll get the registration site coming up. And this is the Realtor Quest logo. As I mentioned, it is in May, and it'll be taking place, the dates for 2019 are there, 2 days in Toronto. And again, we typically hold a Global Affiliates Networking reception in conjunction with that event as well. So that's really what I wanted to cover. We have roughly about almost 500 as well, global affiliates from across the U.S. With investment in the U.S. being quite a large portion of Canadians investing in Florida. We have a large Florida contingent. We have, I think, around 10 or 12 Texas realtors right now, so they're in early and starting their networking. And yeah, so we just keep continuing to build that program and how we can better help connect realtors for inbound referral. Brian, did you want to add?
Nope, that was perfect.
Yeah. So I don't know if Amber, if that, or Amy, I should say, resulted in any questions.
I have some, but this is the global affiliate thing. I'm surprised there's only 10 of us from Texas. So you're going to be in Boston?
Yeah, so I'm looking here, I'm going through my slides. I thought I had a Korea Global. So to find out more on the program, I must have deleted that slide by accident. It's koreaglobal.ca is our global affiliate website. So koreaglobal.ca, and it talks about the program and how you sign up. And I will be in at the National Association of Realtors conference in Boston this year. And we are looking at attending the Texas meeting in 2019.
Great.
Yeah. So hopefully we'll be able to do maybe a panel session or something there as well on.
All right. So if you're interested in becoming a Korea Global affiliate, you register on Korea, not that doesn't.
KoreaGlobal.ca.
Okay. KoreaGlobal.ca.
Yeah.
And that is great. I do have a question to go back to about actual transactions.
Perfect.
If that's okay. Someone is asking about just land, typical price per acre / hectare, which I know is a tough question for a country as big as Canada. It would be tough to answer here in Texas for that matter. But what is just the raw land, or is that something that you get a lot of sales inquiries from foreign, or are they mostly buying structures?
Well, I guess generally speaking, we don't have a lot of individuals, if we're talking about from a residential or even a farming standpoint, don't have a huge market per se related to that as much as we do the residential, obviously. So that's kind of what we key off of. And as you said, the whole trick here is if you're talking about land per hectare or whatever, it really depends. Are you talking about a piece of property that's on the ocean, or are you talking about a piece of property that's sitting in the middle of Alberta? It's going to make a huge difference in terms of what the final price is. Generally speaking, if you were looking at farming for all intents and purposes, you probably are looking on the East Coast of Canada. If you are looking at recreational, if you ever fly over Canada, you will be totally impressed by how many lakes we have that are they're just nice, secluded, great places for if you're looking to come up and just do the cabin kind of scenarios. So there is a lot of that up here. Generally speaking, what you'll find is, I guess to some extent, I would have to say we're a little like Texas in that, we basically all get together in the big city, and then the minute you're outside of the big city, at least up here, you're looking at at land which is being used for farming or some kind of development. So you don't have a lot of the, one town after another town. You'd have to go quite a ways to find
Right,
the next town is what it boils down to. So.
Okay. To give folks in Beaumont and Arlington an opportunity to ask any questions you guys might have. Yes? No? 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 Okay. Oh, Katie might. I'm trying to unmute you. There you go. What's up, Katie?
Well, I just was wondering about a transfer tax because I know that was a big deal down here. So I was wondering if Canada had one.
It'll be location by location specific. Most locations you are not going to have to pay a transfer tax.
Cool.
If you get over into the BC area, you'll find that may not be the case. But generally speaking, like I said, we don't have a lot of taxes on real estate up here. We're pretty open as far as that goes. What we do have is we have more restrictions on how they do the financing up here, and we're using that as basically the gatekeeper for us.
It's been very interesting to listen to.
Great.
All right. Whoop. Arlington, I'm unmuting. Okay. Whoop, wait. I'm trying to unmute. Come on. It is not. Yeah. Oh. And then he left. I'm not sure.
There he is.
There he is, but I can't unmute you in Arlington for some reason. Yeah, you could type in the question if you have a well, he doesn't have a computer there. Are you unmuting yourself? No, he's just moving the camera. Sorry, I should. Okay, sorry. If you have a question, you can email me or Tiffany, and we will send it to Brian and Sharon and try and get it.
We'd be more than happy to answer any questions.
Sorry about that.
Sure.
Yes, Arlington has had some tech stuff today, so we won't hold it against anybody. So, all right. Well, Tiffany, you said there was, and I'm sorry, I've already forgotten.
So this question is really Brian or Sharon. Inbound transactions to the United States, I guess, what are some trends that you're seeing? What are some things Canadians are looking for? How has that been going on?
So basically, okay, so you're talking about people going from Canada into the U.S. Obviously, in 2007 to about 2009, there was a large number of individuals moving into the United States simply because of your market at that particular point in time. So they were taking advantage of that. And what we found back in those particular days, and I don't have the chart in front of me, so I can't speak exactly to what year it was, but basically what was occurring at the same time that your market was going down was the value of our dollar was increasing. There was actually a point at which we got very, very close to being at par with your dollar. That obviously has gone back the other way. And so now basically, as I said, you're looking at, basically a significant 25% increase in dollars. So actually what we're finding right now is we have a large number of individuals who are cashing out of the U.S. market. And so because what it boils down to is even if your market had stayed the same, even if they bought a property and it hasn't increased in value, for all intents and purposes, it's increased 25% if they bring those U.S. dollars back up here. So we're seeing a large, especially in the Arizona, those kind of areas where people are actually the reverse trend at the moment, and they're actually selling those properties, which does mean there's an opportunity for you there as far as from a listing standpoint, as those people look for somebody local to basically help them. And they really appreciate it when somebody understands that the Canadian market and the U.S. market are quite different, because it helps them, because up here it's a fairly short process, and down there it can be fairly lengthy. I don't know what we'll see in the future. Obviously, the NAFTA, and that being approved actually is a probably a positive thing for both countries as far as the real estate market goes. There was some concern that if NAFTA didn't go through, that was going to put some serious pressure on our dollar. But that's not going to happen now, as far as we can tell. So we'll just kind of wait and see how that all plays out. The other piece, I'll just mention it really quickly. If you are working with people coming down, especially if they're talking about second properties, one of the things that you're going to want to remind them of is insurance, because this is like huge. We have a national medical program up here, but the bottom line is after they've been down in the United States for a period of time, they actually lose that benefit. And so individuals who have second properties in the United States basically pay a lot for insurance, and as they get older, they pay more. And so as a result, again, that's part of the reason why we're seeing some of the reverse trends down there in terms of people who've been down there for 10 years, but they're getting older. And so it's actually costing them a fair amount of money to carry insurance to stay down there. You need to just kind of, if you're going to get into that marketplace, read all of the books and understand all the nuances related to things like insurance and, you know, those kinds of tax issues that result when we get a little bit older.
Interesting. Just to reiterate, I think this is for Sharon, CREA Global is a Canadian initiative. Membership is paid to CREA, and it's basically a referral program is the question.
It's a networking program. So yeah, so it's sort of twofold. One, the main impetus of it was from US Realtors asking how it could easily connect with other Canadians. So our whole hope is that the program will help make connections for potential referral opportunities.
Great.
That's right. And it is launched by CREA. It's a subscription service. So it's $95 US per year, and it's a recurring fee. You can cancel whenever, but it's when you sign up, it's a recurring fee annually. And then we have other resource and education opportunities. So we hold monthly webinars like this one, where we talk 1 month, and they're all recorded and on the website. So we've held 9, I think it is so far. Some on finance, just talking about Canadians getting US financing. We held one on cryptocurrency, what's happening in that space. We've held a very similar webinar to this one where Brian and some of our other members have spoken about buying in Canada. So you have access to all those webinars, and they are typically held monthly or every second month. And then different resources that we produce. So we've produced the Doing Real Estate Business in Canada guide. We are now conducting a survey in Canada on activity, international activity in Canada, and producing as well some provincial information on each province, what's happening in each province. As Brian has alluded to, every province has slightly different licensing requirements, some different agency requirements. And so we're putting all that together in resource bundled.
Interesting. All right. Somebody has asked if we will send him the slides. We will be posting these slides on the TAR website so that everybody can have them.
Yes.
And be able to find them in the events listing under the listing for this specific event. I'm looking at the clock and we have gone well over, so we do have a couple more questions, but I feel like we should let Brian and Sharon get back to their jobs and lives, and we are going to wrap it up. But again, if people have pressing questions, they want to reach out, they can, was that CREA.ca?
CREAglobal.ca.
Global.ca, or you can shoot Tiffany an email and she will forward it to Brian. Tiffany is TWU, that's TWU at TexasRealtors.com, and I'm A Gamber at TexasRealtors.com, and we will pass that information on to them if you shoot it to us. Guys, thank you so much. This was
Thank you.
interesting.
Thank you.
I got lots of comments in the question box with people saying, great information, thank you so much. So we appreciate it.
Just to let you know, what I'll do is I'll update the slide deck with some contact information, and then you could save it below the recorded webinar, and it'll have our website on there. It was just an oversight on my part, so I apologize. And make sure you have that so you can save a PDF with it as well.
Great, perfect. All right, guys, thank you so much. We're going to wrap it up. Everybody have a great day, and we'll Well, I don't know if we'll see you soon, but we hope we do. Okay, bye-bye.
Sounds good. Thanks.
Great. Thank you. Great day.
Bye-bye.